Welcome to YieldNerd, an educational show about how you can acquire and manage yield. All right, Yield Nerds, the last couple of pieces of episode 8 are now upon us. In this part, we are going to look at tax implications and go ahead and buy a preferred stock so we can go from start to finish on this topic. When we talk about tax implications, most people immediately start thinking about, gee, I just bought something that could either go up, it could go down, it's short term, it's long term. And you may remember from our previous discussions that you are buying some things below par, buying some things above par. When it converts, you could have a very different yield, anywhere from 5% to 8% to negative 0.73% in the example we used. And from our discussions on muni bonds, you may remember that the premium or the discount you get does indeed get the treatment of a long-term gain unless you qualify for alternate minimum tax, in which case it is counted as ordinary income. The interest you gain in the bond is always treated as ordinary income. And so the question is, how does all of this work in the tax treatment for preferred stocks? The irony is that there are some preferred stocks that do give long-term capital gains. The rest of them are short-term capital gains or ordinary income. So the question is, given a choice, which one would you buy? The answer is obvious. You would buy long-term capital gain preferred stocks. So the question then becomes, how do you find them? And we go back to our good old Quantum Online. That is the easiest place and the quickest way to find it. I want to reiterate that I am not endorsing that platform. I do not have any affiliations or advertisements or anything like that with them. So once you are on Quantum Online, you would go to income tables, and then you are going to go ahead and look at the income security screening form. And when you click on that, you are going to then say, okay, what do I want here? The first thing you're going to say in that screen is put your minimum coupon. And you can put whatever value you want. I just entered a sample here. The next thing you're going to say is, what is the Moody's credit rating? And the minimum credit rating you want to put is Baa3 if you want investment grade. And once you do both of those, there is a second half of the screen where you can say, hey, I want this bond to mature within a certain period, and you can put whatever duration you want to put. And then you identify what kinds of securities you want, and the tax advantage dividends. That is really where you get to say, I want the ones with the long-term tax advantage versus the ones with the short-term tax. And that is where you will end up entering your information. You do have the ability to filter by cumulative versus non-cumulative. And once you get past that, you will see results. I'm not endorsing or suggesting you buy any of these preferreds. I'm merely showing you what kind of coupon rates you can get, where you can see the maturity dates. As you can see, all of these are within a year, and they are all investment grade. And you can then click on any of them and do your own research to make your decision. And the key to remember here is, let's say that you found a security, it's NEE-Q. If you go to a different brokerage and search for NEEQ, you will not find it because different exchanges list the same security differently. So on Schwab, for example, it would be called NEE/PRP. On other ones, it would be called NEE-P and so on. So you kind of need to do a little bit of work to match up the names of the security. And you really want to use the CUSIP. That is the best way to do it. If you don't want to do any of this, you can always go to Edgar and you can type roll P or roll or RBC, and you can read the prospectus and do it that way as well. So whichever one works for you, you can do your background research and find tax advantaged preferreds. Thank you. And now we are going to go to buying a preferred stock. Let's talk about how we do that. You may remember from our earlier examples that in The low duration treasuries provided the best yield, and then agencies, and then corporates, and munis came at the very, very end, depending on your tax bracket. And so the question is, where would preferred come? My humble opinion, because preferreds are higher risk, you wouldn't buy a preferred with a very long duration because that is a big risk. You probably want to hover around the low to very low duration. There you're competing against treasuries. And you would say, if I want to get something that is better than treasuries, a higher risk, how much yield do I want? And that is where you may sit there and say, I want something that gives me a yield of X% above treasuries, and you should decide what that is. And that is how you would filter to find the right preferreds. In order to do that, you would go into Schwab, and once you're on, you would go to stocks, and once you're within stocks, you would then pick the preferred screener. The Schwab preferred screener has its own advantages and disadvantages. It does give you some basic filters such as what is the yield, what is the sector, is there a call, is it cumulative, and so on. However, you're going to see that it does have some drawbacks. Schwab presents results in this manner where you've applied your filters and it says, here you go, you're ready to go. However, when you try to take action based on this, for example, we can take Becton Dickinson, BDXB, that has a current yield of 6.47. You can then click on that and it says, here is BDX and here is BDXB. I want to make it clear, I'm not recommending that you buy it or not buy it. This is purely education. You really should be doing the research on the equity and the preferred, not just one or the other. So you can see here that the equity trades for 229, the preferred trades for 47.52. And if you were to go back to Quantum Online, you would then note that 229 is less than 240, which means the current conversion price is 0.2083, or the conversion ratio is 0.2083. And that is the key thing for you to note. And you also notice the nice thing here that it does give you long-term capital gains tax rate, which is good. So the question then is, if you take 0.2083 and you multiply 229, which is the current share price, this particular preferred should be trading at 47.7, but it is trading at 47.52. It's not a huge discount, but I'm sure we'll take any discount we can. So in English, here is what it says. You pay me 47.52 today. I will pay you a 6.47% interest that will be taxed at 15%. As long as BDX is not bankrupt in a year, I will then convert your money as of now, based on what we know, into 0.2083 units of BDX, and that's going to give you a little bit more of a premium, that 18 cents on the dollar, and that gives you an overall yield of 6.86%. For a duration of less than a year, which is barely 7 months, that does beat treasuries by a substantial amount. Whether you want to buy it or not is entirely up to you. That is merely the fact. In the event that you chose to buy it, you would have researched BDXB, you would have clicked the trade button, and if you were to click trade, it would show where the bid and ask spread is. You would have entered quantity. I just entered one as an example. And look at this spread. Because I'm doing this after hours, it is showing that the bid is 35 and the ask is 75, which is nonsense. But during the day, it would indeed trade at somewhat of a shorter spread. But once you were to enter your price, you can then say buy, and you're going to see something, a couple of things to note on Schwab. There are no fees, there is no commission. However, this says the yield is negative 91%, which is an error, and that is just because preferreds are not represented correctly on Schwab. So once you get past those, you should be able to buy it. Summary of preferreds. We learned that preferreds have many nuances. You need to put a lot of pieces of information together to understand them. Current solutions, brokerage solutions, need to be patched with other industry solutions to really create a holistic view. Convertible preferreds have arbitrage opportunities, but you also need 2 or 3 systems and a calculator to understand and buy it. Thank you for the ride with me on preferreds, and we're going to start looking at portfolio allocation next. Have a nice day. Thank you for listening to Yield Nerd, a do-it-yourself show for yield accumulation and management.